A few weeks ago, I wrote a rule for a reconciliation I'm building. It felt obviously safe. If an account's balance hasn't moved since last month, certify it automatically. Let a human spend their time on the accounts that actually moved. It isn't safe. Two offsetting entries leave a balance exactly where it started. A balance comparison can prove that net did not change. It can't prove that nothing was posted. So that register would have reported those accounts reconciled, signed off every single month on activity that nobody had looked at. I caught it before it ran, but sitting with it afterwards, I realized the rule had done something specific. It asserted a state it had no way to observe. That is the question this whole video is about. Not how smart your AI is, it's what your signature is claiming and whether anything in your close can actually see it. I'm John, a CPA and a controller, and I carry out a month-end close every month, and I build the AI into it myself, which means I get to find out where it breaks before I have to sign anything. Before I get into my model and the 4 stages I built for this, one distinction, because it decides which kind of AI in the close video you're actually watching. There's genuinely good work out there right now on AI in the close. Most of it reconciles the claims about a close. The tracker says 40 reconciliations are done, the memo says the allowance was reviewed, the notes explain why cash moved. Feed all of that into a model, ask it to check one source against the other, and it will find real contradictions. That's useful work, and I'd rather people did it than didn't. It is not the same job as testing the transactions inside the close. Nothing in that workflow ever asks whether one payment settled 3 invoices or whether the same invoice got paid twice, because it never saw the invoices. It saw a document that talks about them. Both jobs matter. They are different jobs, and the first of my 3 tests is where you find out which one you're doing. Every stage of this model answers 3 questions. 1. The data test. What population does the AI actually see? Not which files you uploaded, which population. Is it complete for the task? And is it the transactions or the description of them? 2. The evidence test. What documentation stands behind it? A save prompt, a written procedure, or a QC gate on the checklist? I'll be honest with you, this is the test the profession is getting good at fastest, and that's a good thing. It's also the one you should expect your software to start doing for you. 3. The signature test. When you sign that close, what exactly are you asserting? And is there anything in the close that can actually observe it? My auto certification rule had the documentation. What it didn't have was the transactions. It was reading a balance, and a balance is a description of them. That's exactly why it failed the 3rd one, and the 3rd one is the one that ends up with your name on it. So stage 1, one task, fully reviewed. AI does a single mechanical job on one exported population, matching invoices to the banks and handling an exception list. What you're asserting is simple and completely observable. I looked at every item in this population myself. You can say that because you did. Stage 2, repeatable routines. The same task runs every month from a connected folder with a written procedure and exports that hold their shape. Now you're asserting something bigger. I reviewed the exceptions, and the methods that produced them is the method I approved. That is only observable if the method is written down and you tell whether it changed. Stage 3, close integrated workpapers. AI prepared recs, roll forwards, and flux commentary go into the binder as prepared by Workpapers with a QC gate on the checklist. You're now asserting that this was prepared under a procedure you approved and reviewed by you as a reviewer, which is only observable if preparation and review are genuinely able to be separated and both are recorded. If the same pass did both, you didn't have a review. You have a second opinion from the same source. Stage 4, Purpose-built close tools. An application carries your close logic. You're asserting that the process which produced this close is the one you specified, and that you judged every exception it surfaced. And here is the hard part, the part my certification rule taught me. That is only observable if the tool records what it did not flag. Anyone can show you a list of exceptions. The question that should keep you up is what the tool decided was fine and whether it had any way of knowing. Here's the jump most teams miss, and it's the cheapest one available, stage 1 to stage 2. On the left, last month's run. On the right, this month's. Same routine, same folder, same export format, same exception report at the end. Now, what changed between these two? Not the AI, it's the same model I used last month, no smarter than it was. What changed is that there is now a written procedure saying which files go in, what fields have to contain, and what finished looks like. That's it. That's the entire jump. It's a documentation problem, not a technology problem. And notice what the documentation actually buys you, because it isn't speed. It's that you can now say what the routine did. If you can't describe what finish looks like for your close, the AI can't run it without you. But more to the point, you can't sign for it either because you can't state what it did. Look at what didn't change across all 4 stages. Exception, disposition, accrual estimates, cutoff, the signature. Those are all yours at stage 1 and they're still yours at stage 4. The model has no rung where they go away, and any model that does is selling you something. What changes across the stages is your distance from the transactions. At stage 1, you're touching them. By stage 4, there are 3 layers between you and them, and every one of those layers is a place where something can assert a state it cannot observe. So the closed trust model isn't about smarter AI, and it isn't about reviewing less. Reviewing less is what happens. It isn't the goal, and if you chase it directly, you'll get there without earning it. It's about knowing what your signature is claiming at each stage and making sure something in your close can actually observe it. So where does your close sit? And here's the catch. It's almost certainly a different stage for each task. Your bank rep might be stage 2 while your accruals are still stage 1, and that's normal. Pick one task and ask it the third question. When you sign that off, what are you asserting? And is there anything in your close that could prove it? Tell me about it in the comments, the task and the stage. Thanks for watching, and I will see you in the next video.